Well, good morning, everybody. So this is the watch list for the week of Monday, December 11th. So a couple things you want to keep on your radar. First and foremost, it's FOMC week, which means the Federal Open Market Committee. Jerome Powell will be speaking. So they're meeting on Tuesday and Wednesday. So the 12th and the 13th. It's not so much the fact that they're probably going to hold rates steady where they're at. It's going to be more around the commentary. So what you want to do is you want to listen to how they're feeling about the overall market, unemployment, inflation. More importantly, I think it's going to be very intriguing to see, does he address how Wall Street is predicting 3, 4, 5, some analysts are predicting 6 rate cuts next year. And the only reason that the government would cut rates so dramatically is if the market was in a free fall. Unemployment is going through the roof, GDP is slowing, CPI, PPI are all plummeting. I don't know that that's realistic, considering how fast and how steep they moved rates up. I really don't see them doing a 180-degree about face, but you never know. So, a couple stocks I'm keeping an eye on this week. So first and foremost, what we have here is the JETS ETF, which is essentially the airline indicator. And you've heard me say before, airlines are something that we want to trade. We don't want to own because of the price volatility. So if you were to go back and look at United, American, Delta, Spirit, JetBlue, a lot of them have literally been cut in half by 50, 60, 70, 80% from their all-time highs, right? So a good way to play it is the Jets. So why am I watching the Jets? Well, first and foremost, we kind of found a bottom back here at about $14.77. So you can see we found support, we rallied up, we came back down, we have another really good support level. So the area to watch, I would say, is this fib retracement. We are pretty much right back to the 50% retracement, just shy of the market open. So I think that if we can get above this $18.60 mark, we're probably on our way close back to 20. So you could play this for some upside. What I would make sure is that this doesn't reject back down. We can get above, find support, test, and then start to move higher. So what would I do? I would look for maybe some January calls around the $20 mark. Yep, it's 20% out of the money, but those contracts should be relatively inexpensive. One of the other ones I'm watching is going to be OIH. So overall, gas and fuel prices have come down significantly, and you can kind of see that in the OIH. So what we're looking for here now is going to be a bounce. So oil was pushing 80, 90, thoughts where it was going to go to $110, $120 a barrel, and it didn't. It reversed, and it's now trading around $70 a barrel. So a couple things we know when we look at a fib retracement from a pivot low, okay, to a pivot high is you could find a bounce. So it did not bounce at 304.88, but looks like we're starting to bounce here at 291.17. The market closed at 297.08. We got a little bit of strength coming in just under 300. So what I would watch for here is a test of the 304.88. Can we hold this and then start to move higher? When we look at this on an overall one-day time frame, you can clearly see we are nowhere near the highs of where oil has been or the OIH has been in the past, right? Significant downtrend, now finding some support with a lower low, a higher low, a lower high, a higher high here. And we're now starting to move the trend back upward. So I would watch for a continuation of this trend. We're kind of bouncing right off the trend line. If you were to take the, let's do a couple touch points. We always want to make sure we have 3 or 4 touch points. So we're right in the range here to keep escalating higher. So we have the Jets, we have OIH. One of the other ones that I want to take a look at is Chinese technology. Been selling off specifically BABA. And I think we're probably getting close to some support here. You can see this was trading all the way up in a $300 range. But we've pretty much also started to find a support level right around $70. So we touched back here back in March of 2022. We came down, we broke, we tested, we held, we moved up. We are now coming back to that retracement level. So the question will be is, can BABA hold $70? And if the answer is no, I think you're going to be able to short this a little bit further back into the prior pivot, which is going to be 61. So what would I look for here? I would look for some calls, maybe going into January at that $65 or $60 level, depending upon what overall price is doing. But you can see that definitely with Chinese stocks, it's either risk on or risk off. It's one of those markets where investors are all in or they're all out. You can see here we had a double top. So we topped out here at about 120. We topped out here at 120. We're kind of trading within this range. We're at the bottom of the range, so we'll want to watch for a break to head lower, or can we hold and then start to move up? And then my last one is the banks. And I'm going to play this not with a specific bank, but I'm going to look at the KBW. Or let me see, why is that not coming up? There we go. The bank index. Let's do this. There we go. Perfect. Okay. So the KBW. So this is for predominantly most of the money center banks is what it tracks. And again, another ETF. And what I like about this is we are now coming back up to prior resistance high. Okay. If the FOMC signals that, yep, inflation is under control, we see it continually moderating, we're just going to hold rates steady and we'll take it as it goes. We are right now back up to resistance. So what I would watch for this is, based upon commentary, if we break and we break lower, what I would look for are potential gap fills. So there is a small gap fill right here, back down at about 42. Which is, about a 3% move. But then we have a larger gap down to the bottom. So if the market got ahead of itself with rate cuts, and Powell says, I don't see any rates coming next year, you're going to watch the banks sell off because they're actually rallying on the fact that rates are going to come down, so therefore their deposit costs come down. And because their deposit costs come down, their margins should increase. So the one thing you want to remember with banks is deposits reprice faster than loans all the time. Deposits reprice overnight. Yes, loans reprice overnight, but they only reprice when they come due. So if a loan doesn't come due, then the rate stays where it is. For example, my 30-year fixed rate mortgage is at like 2.625. It's not going to adjust upward for 30 years. Well, theoretically, the house ought to be paid off, right? So you want to think about what is the duration of the portfolio of banks, and it takes a lot of work and energy to do that bank by bank, but one way you could play the entire index is the KBW. So those are four things that I'm watching. As you know, the overall SPY is now approaching prior highs back that we experienced here in July of 2023. Looks like we're going to open up above the prior high, and then the same thing on the triple Qs. We are already surpassing the prior highs. Looks like we have probably started to find an area of support, but again, a lot of this is going to be dependent upon the FOMC and the comments that are made. So again, don't watch for we're not raising rates. Watch for we're holding steady. We're going to hold steady for longer, and we may need to raise again. If not, we're right now at about 391, 392, give or take. I think that we will then go and we will test these prior highs up here at the 405 mark. So a way to play that would be to go out to January and go with some longer dated calls in the QQQ or the SPY. So hopefully you found this helpful, and I hope you have a great trading week. I'd say it's going to be risk off until we hear Powell's comments. So with that, happy trading, and I'll talk to you all soon.